yields back. The chair now recognizes the gentleman from Maryland, Mr. Delaney.
Thank you, Chair Yellen, for being here and for your wonderful service to the country. I have 3 questions. I'll try to get them out all up front so you can think about them. The first is, if policies coming out of Washington across this next several years fall into the category of protectionist by nature, putting through unpaid-for tax reductions that increase the deficit, and foreign policy that might cause foreign investors to recalibrate down their investment in the United States, how much of an impact, negative impact, do you think that'll be on long-term economic growth? That's my first question. My second question is about the labor market. Do you think the biggest issue in the labor market is employment or jobs, or is it pay? Like, what is the real structural problem with the labor market right now? Is there not enough jobs, or is the pay not good enough, in your opinion? And my third question is, do you think about the Fed balance sheet and running off the mortgage investments that you have? Has there been discussions within the Fed about considering other asset classes, such as infrastructure asset classes, if eligible bonds were to be created that perhaps the Fed could invest in? So those would be my 3 questions.
Your first question pertained to protectionism, the deficit, and capital flows, and what impact they would have on growth.
Yes.
And honestly, without knowing more about the details of the policies, it's really difficult for me to render a judgment. In general, we understand that many different economic policy shifts are under consideration, that they may well affect economic growth, inflation, have repercussions for our policy stance. But without knowing something more about the timing, composition, details of those changes, I honestly, I can't. There are many different effects, both positive and negative. On labor, in some sense, I think we have enough jobs, and that's what a 4.8% unemployment rate tells you, is we've created a lot of jobs, but pay in real terms is not rising rapidly. And the composition of those jobs over many decades and even more recently continues to shift in ways that are leaving particular classes of workers disadvantaged.
Chair, so this is my view, that we have more of a pay issue than a jobs issue. And when you look at what's happening to the labor market, particularly the effect of technological innovation, do you see this pay issue being a persistent, enduring issue that we really do need to think differently about?
So we've had very slow growth in real income, and going back to the late 80s, probably the bottom half of the income distribution in terms of pay have seen no real wage increases. Disproportionate gains have gone to those at the high end of the income distribution. That goes to the composition of jobs and the trends that different jobs have in terms of pay, and I think it's a serious problem and what we're hearing from dissatisfied Americans.
And then as it relates to the Fed's balance sheet, which you don't really need to shrink, theoretically, you're not structured like a normal bank, and as you run off your mortgage investments in your current portfolio, have you thought about other asset classes for the Fed to invest in that might be more stimulative?
We are restricted to Treasury and agency debt. We have not.
Have you ever discussed internally what other investments might allow you to pursue your mandate?
Well, I've mentioned that other central banks have broader authority to purchase different assets and have sometimes used that authority. We have not. If we're not asking for that authority, I have said that if Congress were to ever consider changing that authority, there would be both costs and benefits to consider. So I do want to be clear, it's not something.
Sure.
The
Has it been successful in other countries, do you think?
Excuse me?
Has it been a successful policy in other countries that have done it, pursued it?
You know, I've not seen detailed studies, but arguably, yes, it may have been. You know, these are only policies that are used in exceptionally difficult times. It's not normal monetary policy, and countries like Japan or the Euro area that have used it have done it in times that called for exceptional monetary policy accommodation.
Great. Thank you, Chair.